What's up, everybody? Mr. Zero to Infinity says hello for episode 53. When it comes to investing in the stock market, I always want to make a lot of money with the smallest amount of money invested as possible. Place a tiny amount of cash on the table and win big. Invest $10 and make $100. Invest $100 and make $500. Unfortunately, a lot of times when there's potential for a big reward, there's usually a big risk associated with losing all my money. Between you and me, I don't like losing money, so I stick with investments that I believe have higher upside potential and less downside risk. In this episode, I'll be discussing a few more details about why I've been buying Shift4 Payments stock, one of the 7 stocks in the portfolio on your screen. And then I'll answer a fantastic question I received in the comment section on an earlier episode. If you're one of the 3,000 subscribers tuning in for this episode, you already know I've been documenting one of my stock portfolios from zero to infinity with 10 plus years in investing experience. If you're on a mission of growing your own stock portfolio as high as possible, then feel free to hop aboard the rocket ship. By clicking that like button, you help support this channel since it helps the algorithm find more like-minded individuals of building wealth in the stock market. Before I start this episode, remember that all my episodes are for entertainment purposes only. I'm not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. I am only sharing my personal ideas, opinions, and one of my stock portfolios. You should never take any of this information as guidance for buying or selling any type of investment or security. There are financial risks associated with investing. Always do your own research prior to making any investments. Do not assume any facts and numbers in this video are accurate. So let's begin. I discussed a few points about my bull thesis on Shift4 Payments stock in my last episode called 3 Growth Stocks I'm Buying Now in July 2020. If you've been following along with the episode series, which is meant to be watched in order, you already know I have a bull thesis for all 7 stocks, and I'm always looking for buying opportunities to add to my positions as time moves forward. Well, as you can see, at the time I took this portfolio screenshot, Shift4 Payments stock has begun to go up in value. My 11 shares of 4 stock are up a little over 20%. I already know what you're thinking. You only invested $383 and it's only up $83. That's chump change. I have to agree with you there, but remember this. Everyone starts a stock position at zero and builds at their own pace. This zero to infinity portfolio is still very small as a whole, and for that reason, I'm primarily focusing on the beginner phase of building a stock portfolio to show younger investors that it doesn't matter how much you start with. It could be $10, $100, or $1,000. Any amount is a great starting point. I'm a big believer of playing the game and having skin in the game versus watching the game on the sidelines. To summarize, my bull thesis on Shift4 Payments includes a few things. I like the fact that CEO Jared Isaacman is a founder of the company and has been running the business since 16 years old. I like the fact that Jared is on top of innovation. He's been fine-tuning his integrated payment software for a very long time, and I believe the wave of more digital transactions is only beginning in the hospitality industry like restaurants and hotels, along with many other industries for growth potential. I believe every business needs to have technology in some form. Restaurants that don't have food delivery options or the option for curbside pickup will need to innovate during this time. If old school restaurants limit themselves to only cash transactions, then they may not be capable of staying in business. Scanning a phone to make payments is the future and the trend that I've been seeing. And things have accelerated that trend. If a business doesn't provide touch-free payment options now, then they may have to get in touch with Shift4 Payments to make it happen right now. Sure, there is a lot of competition battling it out to gain market share in the payment processing space like Square, but that's primarily the reason why you see Square in my stock portfolio to go along with my Shift4 Payments stock position. I think there's plenty of room for companies to process transactions all around the world, and as time goes by, we will definitely find out if Shift4 Payments stock or Square stock SQ performs better. Make sure to check out episode 52 for some more of my personal thoughts about Shift4 Payments. Next up, let's go over an excellent question I received in the comments section on my last episode. Just so you know, I try my best to read every comment, so never hesitate to ask a question down below. Everybody has their own unique thoughts about a specific stock or about the stock market in general, so feel free to leave it down below. So let's pull up the question on your screen. When a position has such a high return, such as Fiverr, do you ever plan to sell it? Or what price point do you have your eyes set on for FVRR? That's a great question. Here's my answer. Looking at this screenshot, I invested $1,182.91 in Fiverr stock since the beginning of the year, which equates to a position size of 41 shares. I know a lot of beginner investors focus on that total gain percentage, which is over 185%. We're nearing two-bagger territory, which is a 2x multiplier on my money. I invested $1,182 over the course of 6 months, and the value at the time of this screenshot is $3,381 in my top position. If I sold all 41 shares of Fiverr stock, I would take on a profit of $2,198, and that amount would go to my cash position. From my perspective, my portfolio management style will evolve as we level up this portfolio over time. Right now, the value over the whole portfolio is a little over $8,300, which is still a very small amount in my opinion. Are there odds that my Fiverr stock position can fall down in value over the next few weeks, months, and years? Of course. Whenever I allocate cash and invest in a stock, I'm investing in a company that's backed by a management team. Is there only one factor to why Fiverr stock has popped in price? I personally think there's always many factors to short-term fluctuations in price. Do I like Fiverr's company valuation when it was trading in the 20s versus the all-time highs in the 70s and 80s right now? That's a no-brainer. In my opinion, time is the key driver to finding out if an investment is successful or not. Looking at a 185% gain right now, you may be thinking, sell now, lock in a profit. For me, I don't get too distracted by the performance numbers. I'm not in competition with anyone else or even the S&P 500 index for that matter. I'm only competing against myself, my goals, and my unique time horizon for my investments. Right now, I'm a part owner in a company called Fiverr International, which is a website that connects businesses with freelancers offering digital services all around the world. If I sell any of my shares, I'm liquidating my ownership stake in Fiverr International, the company. I would be limiting my upside potential if the company continues to build out the website globally, but I would be locking in profits if I sold. A quick scenario to think about to understand my long-term investment philosophy in growth stocks is to imagine we went back in time on Apple's IPO day of trading officially on the stock market. Apple, Tesla, Netflix, Google, you could choose any of those stocks for this scenario. Back on the IPO day, you did your research about the company up to that point in time, and you had a long-term bull thesis in the company, so you invested your money. As time moves on, there are ups and downs to the stock price, and your original bull thesis will change depending on updated quarterly earnings reports, management changes, and the list goes on. As time goes by, a large percentage of your bull thesis stays intact, so you never sell and you continue to buy more and more shares of stock as time moves forward, focusing on the quantity of shares versus the stock price performance each day. Now we're in 2020, and you get to look back decades versus weeks and months to track your performance. As you all know, a stock like Apple continued to trend upward over a long period of time, and Apple is one of the largest companies in the world. You found a company and you stuck with it for a very long time, regardless of the short-term ups and downs. My goal is to find the next Apple stock or the next Tesla stock that has growth potential to go up in value for a very long time. That's why I try to find stocks that will have an upward trend long term. Will my bull thesis change over the course of time in any of my stocks? Of course. That's why I have to actively stay on top of the trends that I'm seeing. Right now, even though Fiverr is trading at all-time highs, nothing has changed with my long-term bull thesis, so I'll be staying the course. The main thing that has changed is obviously time and the stock price since buying cheaper shares earlier in the year. Will any of my stocks be the next Apple stock? Who knows? That's the great thing about the stock market. Only time will tell. There's plenty of ups and downs, and anytime I see one of my stocks drop in value, I may see that as a big opportunity to buy as long as my bull thesis is intact. Let's end it there. Play the music. Maybe I didn't earn your subscription with this episode, but there's always next episode. It's free to subscribe, and one of my favorite comments from last episode is on your screen. Feel free to watch my earlier episodes of how I'm growing one of my stock portfolios from zero to infinity. All my episodes are meant to be watched in order since the stock market is always changing and there are always new trends to be found as the weeks tick forward. Instagram is Mr. Zero to Infinity. Thanks again for watching. Let's keep building from zero to infinity. You got this. Disclaimer, this video is for entertainment purposes only. I am not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. All ideas and opinions presented in this episode are mine and mine alone. You should never take any of this information as guidance for buying or selling any type of investment or security. Always do your own research prior to making any investments. Do not assume any facts and numbers in this video are accurate. Read the disclaimer on your screen fully. Peace.